Hello traders, Gary Wagner here. Just about 11:10 in Honolulu, 4:10 in New York. It is Thursday, February 16th, 2017, and this is the Daily Report for Gold and Silver. We do have gold and silver, although closing off of the intraday highs today, closing moderately higher on the day, with gold finishing up approximately at $12.40, a net gain of about $7. Almost 0.6% in terms of gains on the day. When we look at the low was $12.33 on the day, and the high $12.43. So as you can see, we closed roughly $3 off the high. The majority, the bulk of this move today, however, was dollar weakness, and time permitting, of course, we will pull up a dollar chart. Over to silver. Silver also closing higher today, 0.6% in terms of the gain, over $18 at $18.07. The low today, $17.93, with a high of $18.14. And so traders, to give you an idea of the effect of dollar weakness today, I've just pulled up the cash market spot prices in gold, their net change, up about $5.80, currently trading at $12.39. And as you can see, I've pulled up the Kitco Gold Index right here, and we can see that on this net move of $5.40 to the plus size, $7.50 of it happens to be due to a weakening U.S. dollar, and normal trading actually took gold prices lower on the day. So traders, absolutely no doubt, I considered issuing a buy signal today as we saw this market get bid up in the way that it did, closing up about $7, closing right now at $12.40.10. First of all, in terms of identification of a straight candlestick pattern, when we look at these three candles, what we get is a variation off a three-river morning star. After a defined downtrend, we meet that criteria. You get a long red candle. You then get a star that is gapped below the close of the prior candle and gapped below the open of the following candle. We certainly got that, and then that of course is followed by a green candle. Now the thing about this green candle, and we talked about this yesterday, it's very, very much like a hammer, small body, large tail, because typically on a three-river morning star, you would have a candlestick that looks something like this, a large green candle, as opposed to this hammer. The fact is we did get follow-through today, but the follow-through took us up to our current level of resistance, which sits at $12.42. That is the 61.8% extension of this rally here. We have this rally, about a $100 rally, 38% retracement. We start our extension from this point here. I think that once we see a break over 42 on a closing basis, we can safely issue a buy signal. And at that point, I think that we can, in terms of our exit strategy, look to get in around 43, 44 and get in anywhere between 1270 and 1280. In other markets that we follow, U.S. equities were mixed today, with the Standard & Poor and NASDAQ trading lower on the day, but the Dow Jones Industrial Average did manage to eke out a gain on the day, putting it once again to a new all-time record high, closing at 20,619. And then, as we spoke about just a few minutes ago in reference to the dollar under pressure now, under pressure substantially for the last 2 days in a row, in which at its peak it was at 101.81. That was just the other day. And now it is trading just above 100 at 100.50, putting it off about 0.7% on the day. And of course, that is over 100% in terms of the reflection on gold pricing, since gold traders have actually taken gold prices down a couple of dollars, but you have more than that compensated with a weak U.S. dollar on the day. And here are the interesting things. In terms of our current level of potential support in the market, and I believe it to be very, very minor because it's a 50% retracement on the dollar. That comes in at 100.34. We're at 149. So we are just above that price point. However, I think real support in the market does not come in till about 99.50. That is a 61% retracement of this entire move. We can also see technical data from which we can see the market bottomed at the beginning of this month in February and form that base at 99.50, I think that there's a high probability that we will see dollar index return to those prices. So traders, as I have said through the show and over the last couple of days, that over these last 3 days, we have absolutely seen signs of potential support and a bottom forming in gold pricing. We talked about that as this market was trading dynamically lower just 3 days ago, hitting this low at about $1,200 and $17 per ounce. We're now sitting at $12.40. So an incredible move over the last couple of days in trading. At the same time, this most recent move has been predicated exclusively by U.S. dollar weakness, because actual selling took the market lower today when we look at the relationship or the net change in gold prices. My key right now is that I need to see this market trade and break above 1242. That is our current area of resistance. That is that 61% extension that we have been looking at over the last week and a half. And should that price point get taken out, that will absolutely trigger a buy signal with us. But I do want to see how the market reacts now that we are butt up against resistance. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.